Hello traders, this is Alex with the StockMatrix program. I've got a couple trades that I didn't get posted on a video. I do keep it on X. Again, you can go through and, or as a review from this video, you can go through and kind of look through it, or if you wanted to print out the charts or stuff like that, you got at least a place to go. Again, you can see I post a lot of different things. So this is my X account. Here's the portfolio, the current from Bar Chart. Again, I'm not a sponsor of Bar Chart or anything. I do like their service. It's not perfect. Some of these didn't get updated for some reason. But we got, all the losses we've occurred so far have been just losers, and all the winners have stayed on. Now we've had, again, I put a dollar fee, so I know that I can look at this. I know I had 38 trades. Now we have 17 select stocks, so I know I've over doubled it, so we're beyond just the 17 upfront losers. I don't think we've had any on longer than that period. Now there's one ED, I put a March one on, so we're going to have to roll that. But I just got specific. Again, I use the KISS Smith method, right? Keep it simple, stupid. I have certain rules. I just write them down. It's one little page of rules that I apply. Now you can create your own, right? But you got to follow them. And I've done that religiously through 40 years of trading. I also do that on these options. I just religiously do it. Now there's if you have the tons of money, you don't need to trade the options, right? But to me, it offers a little safety net. It costs you money, right? You don't make the same amount, but also you don't spend as much either. 100 shares of Meta at 500, whatever it is. I mean, Jesus, or 600. You're talking $62,000 to control 100 shares. Well, where we've got $7 grand tied up into it with profit. So again, you can see that there's some definitely advantage, and of course, for every advantage, there's a disadvantage. So there's always a trade-off. It's a little more complicated than just outright buying it, but a lot of people with 401ks can't really buy or go short stocks. They're uncomfortable. Their 401ks won't let them do it, but you can, if you're set up with options, you can buy puts because you're not selling it, you're buying it. So, but again, that's an alternative that I like. I make more money to the downside faster, right? The trends are more slow, methodical to the up, and a crush to the downside. So that's the setup. You understand that? That's the rules of the game. So when it goes short, it tends to be much quicker. I always do 90 days out. So right now I'm trading in June options. So some of these, like I said, the ED, I'm going to have to get out of, but I just wait for the second week prior to, and I get out and roll it to the next one if I'm still in the long position. Now in the trial period, Cintas had 20 grand profit. It went straight up, never had a break. So those are the ones that a system tries to catch, like this one, because it's a longer term system. If you're a day trading system, you'll lose money on that for sure. So anyway, I got long-winded there. But here's the portfolio. You can see the trades. We're going to look at coin on the charts. That's one of the trades that went short, and then or bought puts, and Amazon bought puts as well. Let's look at our statistical page and do a quick review. We do have some upcoming annuals. We have a pair in Tesla and a pair in Cintas. Now, Cintas also has 90 degrees or 90-day calendar days off the high. Again, these are Gann stuff, right? The annuals, the 45-day cycles, to me, are pretty important. So again, that's why I keep track of these. Now we have a 45-day off the high that occurred Friday on NVIDIA, and I believe this will be Tuesday or Monday on the Cintas where the 90 degrees come over. That's it on that. So we're at 450. Looks like the peak high of all these stocks as an index was about 464 twice. So again, quite a bit of drop on these stocks. We did flip this pig from to a bear on the short term. Again, -1, right? So again, it was plus 10 or something at the peak. So well, I guess that's right here. Looks like plus 13 on the short-term trend we got up to, and now we're at -1. So again, the short-term trend always goes first. The long-term trend still above. That's at +3. So we have 8 long and 10 long and 7 short. So again, but that's a coin flip, right? Because we know that when it breaks, you typically breaks much quicker than the rally. The rally tends to be slow, and the breaks are freaking crushing. Okay, let's actually go through the two charts. Here's Amazon. You can see we've had a pretty good break on the thing, but again, it's been chopped. So that is the trend so far. Now again, you don't know. A system don't care, right? If it gets chopped to death or it makes $1 million, it don't care. But you can see over time, these trends have these bigger legs, and that's what the system's trying to catch. And hopefully break even or minor losses on the chops, right? Because the bottom tends to chop, the tops tend to chop. So now sometimes there's V tops and V bottoms. System will rake money on those. All right, let's go to the other one, which was coin. And here is you can buy me a cup of coffee if you want. Here is the coin decline. Again, similar, right? We had several chops. Again, I use box method of 3 or point and figure kind of method of 3. So here is, now this one's the current one. So we got 3 boxes. This is where the stop will be above there for quite a while. And it hit the 1-to-1 trend line off the highs. So I find that a little fascinating. We have the time off the highs as well. 90 degrees is typically the pound. So again, I'll be looking for some type of either corrective high, right, next week into March 6th, 2 weeks, or a smash, right? So now that doesn't mean it has to stop there, but again, typically 90 degrees off the high or low is pretty important. Now this one happened to be 90 degrees off the low, was the high. Let's go back and take a look at that. So you can see this was the low. Again, I got that highlighted here because again, it was beyond my chart. So there's the 1-to-1 coming up, and it was 90 degrees over was the high. Again, that's what Gann did. That's what I'm doing. So you take that, and it was, you know, close with the lunar eclipse. And you can see here's the lunar eclipse. Here was an inside period, and then we broke the trend. Oops. We broke the trend, and the solar eclipse was a day up, and we had a big fade. So anyway, it didn't ever broke trend. We, you know, again, using the 3-box method, we would still been long until this stopped. So it had an awesome trade on the matrix and the options, but that was in the trial period. And then we chopped, so it makes a little sense. Now let's go to the actual daily chart. Now, just like Gann, I like to use older companies. W.D. Gann always made sense of that. Of course, he didn't have a lot of markets to trade like we do now. You know, the commodities are about it, and a few select stocks. He liked the cyclical ones of commodities, and also did whatever stocks that were trading were more cyclical too, based on the commodities, right? He did steel and stuff like that. So, but you can see we have the annuals coming in. I did update this March ones, and if I don't forget, I'll pull up that so you can print those out of my actual on these 2 stocks. But you can see we had some annuals come in. We broke this uptrend support. Let me see if that was mathematical. It was not. Let's put in the 1/2 speed. And there's the 1/2 speed. So we did break that as well. March 5th is the zone we're kind of looking at for that trend speed. We also have other timing coming in on March 4th, 2 different ones. So we've got 3 different ones coming in in the first week of March. So kind of interesting. This one is February 20th. Let's update that one. So yeah, this is the Amazon. Now let's look at the Coinbase. And again, a similar look. Broke the support, broke the uptrend here, had a pivot. So if you squish it down, again, coin had its high back when it first came on, and then had a long bottom. And now we've had these pretty good. Again, it trades differently than Procter & Gamble or Amazon or some of the, the breaks seem to be a little more aggressive. Again, part of Bitcoin, right? It makes a little sense. So here we got this. We broke support here. And you can see we had some annuals. We do have some annuals. Again, this is all the data I have. So I normally never trade a market this short term, but I wanted to get something with Bitcoin that was a stock. And maybe there's something better. I didn't know. But so I used Coinbase. Makes a little sense. Kind of tracks Bitcoin a little bit. So, and I use Coinbase. So I figured why not. Anyway, you can see we had this gap up, which failed. So again, a little concerned that it's heavy. Definitely makes sense. We're going down. This is the next zone off the solar, and the next cycle zone is coming in on March 5th as well. So we got March 5th seems to be popping up, and this is the this cycle of this bottom comes in on the 28th. Let me see what is the third one, 4th one. So we're on the 4th cycle of this. Again, I keep track of that kind of stuff. You can see I got this cycle off this low, high to low. So basically that's the cycle. It must be the 3rd one, 2nd one, sorry. So it looks like to me that the markets are getting heavy. I'm going to scan through, starting from the top of NVIDIA, these charts real quick. I'm not going to go through and pinpoint them. We did have a zone coming in from the last 3 years of COVID, right? 2020 and 2021. So we had highs that made highs again. We got some zones coming up. Here's Meta. Again, had a peak blowout and then a crush. So it actually broke the faster moving uptrend, which was a warning sign. Here's Coke. Now again, the system don't trade that fast stuff. It just does what it does, regardless of the consequences. I don't like that sometimes. I've fought the system many times and I typically lose. You can see we had a zone from the solar coming in here, and it was kind of a gap up. Let's update the next zone. I keep it on the solar on this red and green ones, and I go to where the volume increases. 17 million, 24 million volume there. This was the big, this 20, this is the volume. Anyway, so if it's a break and some type of high and a higher volume, and I update it. So again, around that March 5th zone again. Interesting. Let's go. That's Coke here, by the way. Here's Google. You can see we broke off the highs, getting an old company. February 19th was this is one of the last zones from the solar. There was a gap up March 21st, which was here. So again, from the measuring point of the solar eclipse to this gap up, one full cycle of that fell right here. So again, makes sense that we had some outside day down. Here's a big bar up, high volume, 41 million. So I like to go with the volume. Anyway, so again, we're looking at this next week as some activity again. Again, that's kind of a trading deal that I do more than the systematic approach. Now this was the solar from the high, from the solar eclipse starting point, the measuring point, the initial, right, to this high. So this is a pretty important one, February 27th. Here's Amazon, again, one of those that we just put on. Again, you can see why, right, broke the system, or broke the trend line. This is a 2x1 speed. So again, pretty important, again, around the March 5th zone. Here's Apple. Again, it looks a little weird to me. Apple's a grinder, but it has, kind of like Coinbase, it kind of has these longer drawn out corrections. A lot of people are absolutely loaded up with Apple. Now again, who owns Apple? Well, BlackRock and all the big dogs, right? They control over half of the company of stock shares. So, well, maybe not half, 40%, let's say. I'd have to look it up. But the point is, it won't break unless they want it to break. If they want to buy more shares of Apple, they'll make it go down. They'll create the news, whatever it takes, or just start selling it. And everybody goes, oh crap, they're selling, get me out, you know. And it causes a flood down. Why? So they can have these 40% breaks to load up even more shares. Let's see, what was this one? 32% break. So that was a pretty good correction, right? Kind of similar to what it's trying to do here. So anyway, I'm getting windy here. Sorry. Here's Tesla. Again, kind of a, the high occurred back in December, so we were 2 months into that high already. Here is Lynn, kind of it broke trend, kind of a secondary possibility, maybe a head and shoulder top. Again, you look back the last time it broke 25%. So I drew the same one in here. So we've already, this price already was, well, I guess not. We got to come down to here. So this is the actual, anyway, that's points, not percentage. Here's ED. You can see that the market is just kind of flailing, but it had this huge move up. Here's the previous old highs. So kind of the area of target, I would think. And here, of course, to my target is the solar eclipse. Typically, these markets tend to go up into that. And I'll be looking forward to see what it can do. Again, it had a nice correction, right? Had a bear trap. Now, I like that. You know me. I like the traps. We had a bull trap high and a bull trap low. Pretty classy. I would have never been selling that down there knowing that we made the bull trap up here. Now, it didn't make a complete bull trap, which makes it even a little more bullish. Now, maybe it's just a chopper, right? Maybe we'll stay, you know, we've been sideways basically since 2022 on LIN, or on ED. Here is, it's not erectile dysfunction either, by the way. Here is Adobe. Again, a gap in this Marty ever. If I'd have known, I should have looked a little closer. These gaps are criminal. In this day and age of computers and AI, they can't report their quarterly earnings correct. What the hell? It's like stupid. How would you fire whoever's doing it? Now, they want to have that controversy, right? Oh, going up, up, up. Ooh, gap 10%. Really? Really? Here's IBM. Gap up? Come on. What the hell? So we tried to challenge the gap on Amazon. Failed. Immediately went back to the highs, which makes sense. I would assume we're going to make new highs. Why not, right? But it's, you know, well, let me run this cycle out real quick. February 25th, and that one's April 1st. Again, cycle of this bottom, right? So that's the next one. Let's go to BK, Bank of, and you can see we had a high from 2 years ago. We also had a high 1 day off. Also, right, so the annular was pretty accurate, and also from 3 years ago. So within a week, and it was an active market. Otherwise, I wouldn't have posted it, right? So it definitely was a big high and a pretty good correction thereafter. So, but a bullish market, right? And now again, we had a little bear trap here, and we had a little trap on some of these other swings. So you got to be a little careful of just buying it. And again, what does that tell me? You don't fight the trend, right? The trend is up until proven otherwise, until the system goes short or whatever you're using, a new monthly low, 2 weeks down, whatever your, percentage, whatever you consider a bear market. You at least know by knowing the bear trap is intact, and we had terrible action for a bull after that you don't buy strength, right? You might have to buy the dip, buy the dip, buy the dip, right? You don't just buy it just because. So now, if you're a bear, though, you're probably being a little more aggressive and stops over the highs. Here's Procter & Gamble had a pretty good move, but chopping into the solar zone again. Another March 5th, couple March 5th zones to worry about there. J.P. Morgan, don't fight the diamond, had a pretty good break here. Now again, you can see I have an identical points break, not percentage break, which would project a low in here on March 13th ish. Let's go on. And again, February 21st was the high, or this day here. So let's move this from the solar. That's the high volume day. So anyway, nothing incurring. Let me go to Coinbase again. Maybe look at that. Here's Cintas. Again, back to the solar eclipse. Again, another March 5th zone. So getting kind of more as an index goes. The March 5th is a little interesting. Now we also made a low 2 years ago or 3 years ago. So, and which was kind of the COVID thing. So, it broke 20% after it stock split, which is a little concerning. That's the public bait and switch. Get them more in because they can afford it. It always goes up after a stock split. Boom, drops 20%. So, and now it's halfway. I don't know if it's halfway back. Let me see. It's about 62% back, and that makes sense. In my studies, 50% is the bait. 62 is always a little better. It didn't quite get there, but so I'm not. The pattern itself to me is a grinder bullish. The tendency over the years of when I've studied bull markets is you get these breaks like this. They're just hammer dog, ugly, broke the trend, bear for sure, and then you have these grinders back up, and it just keeps grinding, and all of a sudden by the end of the year, next year, you're at new all-time highs. So that's the tendency. Now it could be a secondary event and a pound. I don't know. But the tendency is as a grinder, just like some other breaks back in Cintas, like this one, right? Just grind. It finally made a new high a year later, so barely, and then it finally made again. It's just a grinder, right? So now that's a pretty bloated price. Let me, Cintas's actual value without all the stock splits is $14,718. So. And it's at currently 204. So a little bloated, not quite as bad as the others, but it's a damn fire and safety company that cleans towels and shit. I mean, how in the hell? I mean, it's been around forever. It's an old company. Probably one of the older ones I got on here. Again, the only new one I have is Coinbase. Okay, I'm going to sign off. Thanks again. Have a great rest of your trading next week.